Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Alan Bush, our senior financial economist, and Mark Soderberg, our senior ag market specialist. Starting with Alan. Alan, what events do you see moving the markets this week?
Okay, well, first of all, on Tuesday, we'll have the October Chicago Purchasing Managers Index guessed at 45 and the October Consumer Confidence Index guessed at 100. Wednesday is a big day. We'll start out with the October Institute for Supply Management Manufacturing Index. That's guessed at 49. The September Job Openings and Labor Turnover Survey, commonly referred to as JOLTS, guessed at 9.375 million. And of course, the big event this week, the Federal Open Market Committee meeting also on Wednesday at 1 o'clock, we'll have a statement from the Fed. And then at 1:30 Central Time, we'll have the Fed Chair Powell press conference. Thursday, September factory orders guessed at up 1.1%. And then the employment numbers Friday with non-farm guessed at up 183,000. Manufacturing payrolls anticipated to be down 23,000, and private payrolls predicted to be up 143,000, and the unemployment rate guessed at 3.8%.
All right. What is your outlook for the silver futures market?
Okay, we don't talk about silver very much, but it's actually performing very well as of late. So the silver market is seen as a combination of an industrial metal and a flight to quality vehicle. So sometimes it responds more to the economic outlook, other times to flight to quality. But this time it's the flight to quality that seems to be dominant. So the industrial component really probably not a reason for the recent gains, but the flight to quality attraction, I think, is the reason for so much strength. Of course, that in light of the Mideast war. Oddly, today, silver is sharply higher despite a no worse situation in the Mideast over the weekend. So silver overreacting to the news and the fundamentals, and I think this market will continue to trade higher.
All right, Alan, why has there only been limited flight to safety buying coming into the 30-year T-bond futures?
Okay, that's a very good question. And normally when there would be any kind of geopolitical event, we could see as much as a 2 full point rally in the bonds. This time there was only barely a 1 day flight to quality move at the long end of the curve futures. So the normal flight to quality safety flows that you would expect in the interest rate futures markets have not materialized. So we have to ask why, what may be structurally wrong. And I think the reason is that there's just too much debt out there to be serviced. Also, keep in mind that we will have the quarterly refunding announcement on Wednesday, with the Treasury anticipated to announce increases in the size of auctions in their bills, notes, and bonds to cover the expanding budget deficit. So the bearish influence of supply concerns, I think, is outweighing the bullish influence of flight to quality. Therefore, lower prices, I think, are likely for futures, especially at the long end of the curve. This is not a time to come in with any type of bottom fishing expedition at the long end. This market just not responding as it should.
All right, thanks, Alan. Moving over to Mark. Mark, with the November USDA crop report next week, what will drive ag prices this week?
Well, of course, we're going to have to be mindful of any macro developments as a result of war in both the Middle East and Ukraine. However, I think the most important factor this week will be South American weather. Over this past weekend, areas in far southern Brazil experienced heavy rainfall, largest totals ranging from 4 to 12 inches across areas of central Paraná south into northern Santa Catarina. Flooding was a major concern to recently planted corn and soybean crops, while much of the wheat grown in this region will likely be reduced to feed quality. Another 2 to 5 inches are expected over the course of this week before a much-deserved break from the recent heavy rains. In west central portions of Brazil, rainfall continues to be scattered at best with much above normal temperatures. This pattern does look to hold for much of this week before we start seeing signs of a pattern shift. Shower activity that has been so prevalent across the south is expected to shift north into some of these drier areas. To date, plantings have been going on, however, at a slightly slower than normal pace. Bean plantings at 40% as of last Thursday is down slightly from the year-ago pace of 46%. And the country's first corn crop is 53% seeded, very near the 56% pace from a year ago. And conditions of Argentina have started to look more and more favorable as soybean conditions get underway this week. Their corn crop, however, is right around 25% seeded.
What has driven soybean meal prices to new contract highs recently?
Well, I think the meal market is really starting to feel the impact of last year's drought-reduced crop in Argentina. For decades, Argentina has been the global leader in soybean meal exports. As their domestic supplies dwindle, Brazil and to a lesser extent, the United States have been forced to step in and fill the void. We had record meal exports for the recently ended 22-23 marketing year, and the USDA is forecasting 23-24 exports to be up another 5%. Currently, export commitments are running 43% over a year ago. Before this week's pullback in meal prices, the percentage of product value had surged to 63%. That was the highest level in 5 months. And last week, we also saw very heavy buying here by the speculative traders. Money managers bought just over 41,000 contracts, as revealed from last Friday's CFTC data. That's the most they've ever bought in a one-week time frame since going back to March of 2020. They've extended their long position now to just over 92,000 contracts, and that has been the largest here since this past April.
And finally, Mark, what do you expect in this afternoon's crop progress and conditions report?
Well, despite some pockets of pretty heavy rain across portions of the Midwest and Southern Plains last week, I think we made pretty good progress, or decent progress at least, across the far western Corn Belt and areas in the eastern Corn Belt before rains arrived this weekend. I look for corn harvest to advance about 10% this week to 70% complete. That's compared to the 5-year average of 59%. I think bean harvest is probably really starting to hit the home stretch now. Looking for about 85% complete here this afternoon versus a 76% average. And I look for the initial winter wheat ratings to show about 45 to 50% of the crop in good to excellent shape. And that's going to be much better than what we saw a year ago when only 26% of the crop was good to excellent, as drought conditions in the U.S. Southern Plains have dropped significantly here in recent months.
Well, thank you both. Remember, the views and opinions expressed here today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.